Hey friends, it's Axel, and I found these 3 potential trades to start 2022 with some profits. Here's the backstory to this. Unprecedented protests have erupted in Kazakhstan. Now, it's been on shaky grounds for a couple of years now, but I'm not gonna get into the politics of it. It would be unfair. I'm not from there, and it's easy for me to be a smart know-it-all when sitting by the pool and living the life, while folks out there are suffering at the moment. It's really bad. Now, what I will do instead is tell you where I think there's great opportunities arising from this, and those are accessible for everyone, including the lovely people from Kazakhstan. Now, if this is the first time you're hearing about this, here's what matters. Kazakhstan is the most economically dominant country in Central Asia. First of all, it's huge, and it's basically in the dead center of a global hotspot for natural resources. You have China on the right, which produces ginormous amounts of gold and rare metals, Russia above it, which produces oil and great MMA fighters, and then you have a bunch of other stands below it, which all produce aluminum, cotton, electricity, coal, oil, things along those lines. And then there's Kazakhstan, which accounts for roughly 40% of the world's uranium output, and its oil reserves are also estimated to be the 11th largest in the world. So how did this situation escalate? For the past 5 years, Kazakhstan was under a reform which intended to move to electronic trading of liquid petroleum gas, LPG. The goal of this was to halt state subsidies and basically let the market dictate prices. Now, previously, the state capped the prices of propane and butane, the so-called road fuels for the poor. But this often created a situation where the country faced shortages of these crude oil derivatives, despite being a major oil producer. Now, the producers that have stake in Kazakhstan, like Chevron and Exxon, often chose to export these fuels instead for a much better price than the state capped offering. So come January 1st, this reform went fully into action. But instead of fixing the shortages, the prices of propane and butane, 2 components of LPG, doubled. Considering that some regions rely on LPG for nearly 90% of their vehicles, and it is the go-to fuel for most people in the country, the price didn't exactly sit well with people in a country with above average income inequality. And it's really bad because fuel prices determine a lot more than you might think. It's not just about having less mileage per unit of fuel or paying more at the pump. Everything swells when fuel prices rise. Logistics and transportation becomes more expensive, and ultimately the more a household spends on fuel, the less money they can spend on goods and services, which brings another set of challenges for the economy. Now, this was a tipping point for the population, which is already battling 9% inflation, as well as hard feelings for the government. Now, if you think this isn't serious enough and it's just some isolated conflict, consider this. Kazakhstan's president resigned on January 4, and the country cut off all internet access on January 5. It really looks to be a full-blown political crisis in the making, which could create these next 3 trading opportunities. The first one is uranium. Kazakhstan is the #1 uranium supplier in the world, which it sells to US, China, and other countries. Now again, there's a backstory we have to get into. The uranium market has just started to recover last year by about 50%, after pretty much a 10-year downtrend caused by the Fukushima disaster, which caused the demand for uranium to decrease. And for those that don't know, uranium is the fuel that powers nuclear fission, which creates steam, which powers a wind turbine, which produces electricity in a nuclear reactor. Now, most investors are betting on the upcoming EU's plan of continuing to use nuclear energy as a way to reduce the burning of fossil fuels, with France in particular outlining its plans to upgrade the reactors and keep nuclear energy in the future, while Germany has started to shut off its last remaining reactors and will move to natural gas instead, which does not sit well with environmentalists, since the burning of natural gas produces carbon dioxide, compared to nuclear power plants, which release far fewer pollutants in the air, but do carry a much higher risk in case something goes wrong. The point I'm making is, despite conflicting views, nuclear energy is here to stay, and the uranium market is so significant in Kazakhstan that any serious disruption may require a collective effort from other producing countries to fill the potential supply gaps. If Kazakhstan is viewed as less stable, the real beneficiaries will be uranium mining companies from North America and Australia. This can really wake up the markets to the fact that maybe we can't just rely on one major producer. Unlike gas and oil facilities, nuclear facilities have stockpiles for years. But even if there isn't a shortage right now, the potential for this to create a shortage is what people are now basing their trades in. And this is what happened to the major uranium stocks, most of which reacted in a picture-perfect buy the rumor, sell the news pattern, rising on the initial uncertainty, falling when the profits were taken and everybody realized that the supply has not been greatly affected. For this reason, I did not trade these stocks right away. I waited for an announcement from Kazakhstan, the biggest producer in the world, which basically echoed that the supply is not yet at risk. Now, there is an investment that I believe will come out strongly in all scenarios. It's the largest public uranium company and one of the key players on the supply side, Canada's Cameco. Now, it's had a solid rise in the past year, along with the broader uranium market, and basically, even if the supply from Kazakhstan falters, the demand will increase and in theory push the prices higher. Now, Cameco will benefit from both sides of the equation. It owns around 40% of a joint uranium venture with Kazatomprom and Inkai in central South Kazakhstan, which is great if the supply remains undisturbed there. However, in the worst case scenario, if the supply is disturbed and other producers have to fill the gaps, Cameco is the second best thing. Cameco has mines in Canada and the US, including the biggest high-grade uranium mine in the world at McArthur River Key. So, in an already uptrending market, it's really covered itself from all sides. Add to that strong financials and a very lucrative price point, I think you've got yourself a good buy. Next up is crude oil. Although Kazakhstan is rich in oil, it only produces around 1.7 million barrels per day, which is around 2% of what the world consumes each day. Nevertheless, the uncertainty for what's about to happen next did already affect the price of WTI crude oil contracts. Any kind of supply disruption or geopolitical risk often means that crude oil prices rise. Now, in the case of Kazakhstan, setbacks in the crude oil logistics in the country are the potential supply chain disruptors. And while it may not be a powerhouse in production, it is still a major hub in Central Asia with all of its oil and gas pipelines. And there's also plenty of foreign investment in the country from the likes of ExxonMobil, Chevron, Shell, Total, and others. Now, if the unrest escalates and the pipelines and facilities shut down, this would create a real supply hiccup in the area and oil prices will get another bullish boost on top of the existing uptrend. I think buying the WTI or Brent contract is a really good investment for 2022. That's what I'm doing personally. And remember, I'm not a financial advisor, but I really do see this market recovering as a whole, especially now when we're climbing out of another deep pullback. Finally, our third trade, Bitcoin. Why is this relevant? Well, glad you asked. Kazakhstan is the second largest Bitcoin mining country in the world, accounting for about 20% of the global hash rate. When the country pulled the plug on the internet and went into a blackout, Bitcoin's computational power sank dramatically by about 13.4%. And now that 20% of mining capacity has to be redistributed across the market. Now, I know it may not be a direct correlation with the price of Bitcoin, there's also other factors, but I think the blackout did play a part in the fact that Bitcoin has lost precisely 7,000 in value since the protests began. Now, the next major level we have to watch out for is the 42,000 mark. You'll probably see this video in a few hours, so it may have already changed by then, but if the price breaks it, I think we're just inches away from this big head and shoulders pattern materialize, which would then mean a huge sell wall on the order book and the price of Bitcoin will fall into the mid 30,000s. That's what I believe. Now, Kazakhstan may or may not have been one of the catalysts, but it fits into this bearish narrative perfectly. So if we see a sustained move below the 41,000 areas, I'm gonna short sell Bitcoin with everything but the kitchen sink. I think there's huge profits there if that's the case. So pay attention to the charts. The crucial moment is literally right now. If you enjoyed this video, hit that like button, subscribe, and let's all wish a speedy recovery to the economy and the people of Kazakhstan. Finance Illustrated, we'll talk soon.